In this video, I will introduce you to a company that you might be hearing about for the first time, whose stock is currently trading below $5. Before we begin, I want to emphasize that this is not an investment recommendation. My goal is simply to steer you away from the noise of the market and introduce you to new opportunities. If you want to see more such emerging companies, be sure to like this video and subscribe to my channel. HITI operates 191 retail stores in Canada under the Canna Cabana brand, making it the largest cannabis retailer in the country. However, back in 2019, the company had only 27 stores in Canada. Since then, HITI has increased its store count by approximately 7 times and aims to reach 300 stores by 2025, which would represent a nearly 57% increase from its current position. Additionally, HITI operates online sales platforms and international CBD brands in the US. While doing so, it follows a discount club model, offering the lowest prices in both physical stores and online platforms. Furthermore, HITI has acquired a majority stake in PureCann to enter the German medical cannabis market. PureCann is a profitable pharmaceutical company operating in Germany. The German medical cannabis market has been growing rapidly in recent years. Since April 2024, the market has surged by 250%, with more than 50% of its supply coming from cannabis imported from Canada. HITI plans to leverage its existing connections in Canada to establish an extensive medical cannabis menu with over 200 varieties in Germany. PureCann generates €15 million in annual revenue with a 29% EBITDA margin. HITI acquired a 51% stake in PureCann for €4.8 million, with half of the payment made in HITI shares and the rest in cash and a promissory note. In my opinion, this acquisition is a highly profitable and strategically significant move for HITI. Unlike other cannabis companies like Tilray, HITI does not view them as competitors but rather as complementary partners. This is because HITI does not engage in cannabis production. Instead, it focuses on retail and distribution. By partnering with producers like Tilray, HITI aims to bring their products to the German market. HITI is not in a rush to enter the US market. The company is waiting for cannabis to be legalized at the federal level. Once it enters, HITI plans to implement the same discount club model that has been successful in Canada. Over the last 6 quarters, HITI has maintained positive free cash flow and generates $500 million in annual revenue in Canada. The company's goal is to expand to 300 stores in Canada and capture 15% of the national market share. Along with its operations in Germany, HITI also plans to expand into other European markets such as the Czech Republic, Poland, and the UK, as well as Australia. Now, let's take a closer look at the company's financials. Currently, HITI has a P/S price to sales ratio of 0.6. A low P/S ratio, especially below 1, suggests that the company is cheap relative to its sales, which could be attractive to investors looking for growth potential at a reasonable price. The company's FCF yield, free cash flow yield, stands at 9.1%. This means that HITI generates free cash flow equal to 9.1% of its market capitalization every year. In other words, if you were to buy all of the company's shares, you would receive a 9.1% annual return. A high FCF yield, especially above 5%, indicates strong financial health and a compelling investment opportunity. HITI's 9.1% FCF yield suggests that it generates significant free cash flow, making it appealing to investors. According to analysts, HITI's revenue is expected to grow by 56% over the next 3 years, while its free cash flow is projected to increase by 74%. From 2018 to 2024, the company's annual revenue skyrocketed from $35.5 million Canadian dollars to $916.5 million Canadian dollars, marking a nearly 26-fold increase. The compound annual growth rate (CAGR) stands at 51.7%, meaning the company's revenue has grown at an average annual rate of 51.7%. Similarly, its free cash flow has surged from -4.8 million Canadian dollars in 2018 to 82 million Canadian dollars in 2024, highlighting its improving financial stability and self-sustainability. After reviewing analyst projections, I believe HITI's revenue and free cash flow will continue to grow in the future. In my opinion, the company has the potential to grow at least 3 to 4 times over the coming years. But what do you think? Share your thoughts in the comments. As of now, the latest closing price of HITI stock is $2.53. By the way, if you want to earn up to $30 in free cryptocurrency in stocks, check out the pinned comment in the comments section. And for more videos like this, don't forget to subscribe to my channel and turn on notifications so you don't miss any updates. Take care, and always remember, a $100 investment today could make your life 100 times better in 10 years.